Access to Insurance Initiative. How are you? Thank you so much for being here with us. This talk is also currently being live streamed on YouTube, so you can come back to watch it again or share it with your friends and colleagues as we go through this session. So let me just do a quick introduction of Hui Lin before I pass it over to her. She is not just a speaker for our workshop, but one of the articles she wrote for BNM is also part of the participants' pre-reading. You will also see Hui Lin again next Sunday, as she will be one of the judges for the final presentation. Now, she is currently based in Germany and is the contact person for the Asia Pacific region with Access to Insurance Initiative. Prior to that, she was the lead on inclusive insurance at Bank Negara Malaysia. So, Hui Lin, I will now hide myself from the screen, and you can take over my screen and share your slides as well.
Sure, thanks very much for the kind introduction there, Alina. And I think first of all, I would like to say thanks a lot to you and Najib for having me here. It's really an honor for me, and I came as quite a surprise, and I'm really happy to be here to share with you guys and also to learn from you and to hear what you think as well. So maybe just a quick sort of background on myself. I'm Hui Lin, as Alina said, from the A2II, or Access to Insurance Initiative. And just in case any of you are not familiar with what the A2II is, we basically work with insurance regulators, primarily in developing countries, on inclusive insurance regulation. So what that means is that we do training and research, innovation labs and so on to help regulators use the tools they have to make their insurance markets more accessible and inclusive. So I know my brief sort of says keynote speech, but I would very much like this to be quite a casual and interactive session. So I just want to encourage everyone to sort of share your thoughts in the chat as we go along, and also because I have a couple of questions for you as I go through my presentation as well. So a bit of just further background. So I've been working in inclusive insurance and sort of policy developments coming to 10 years now, and it is a field that I would say I really enjoy and I really believe in. I'm not sure how many of you who are in this room who are currently working. I think for me, a lot of it was also to chance as well. So I started my career in Bank Negara in the financial sector development department, where I was working on financial inclusion, bank branching policy, licensing, talent development, and just I think in the early years I just happened to be assigned the micro insurance portfolio. At that time I didn't know it yet, but that was definitely a very life-changing moment for me. And I would say that just from what seemed like such a random assignment, I really found what I feel at the moment is my life purpose. And I think a second turning point for me actually was when I participated in a workshop that's, I would say, actually very much like this one. So also when I was at Bank Negara in one of the early years, I took part in a workshop organized by Allianz. It was based on design thinking, and the problem statement was basically how can Allianz as an insurance company serve in people with disabilities better. And I think that really just completely opens my horizons in terms of, intellectually and emotionally, and in terms of like finding what I want to do for my next 5 years at least as well. So yeah, and then I did a sort of a year secondment at the A2II while I was in Bank Negara, and then I sort of went back to Bank Negara again to sort of roll out the Perlindungan Tenang initiative. And then after that, I left Bank Negara and came back to Germany and A2II. So here I am, and that's why I'm speaking to you today. So that's it about me, and I'm going to now sort of proceed into the main bulk of the presentation. And I would say, Alina, if you have to do like a time check or something, please feel free to sort of cut in and let me know. I mentioned that I might have 4 or 5 slides, but I have to say that I lied, and I think I ended up with maybe double that amount. But I will try and keep to the time as much as possible. So let me just try and figure out my tech now. 1 second. Sorry for the lag. I'm glad to see that one of the principles up front was be patient with the technology. And I'm trying to figure out how I can do this full screen at the moment without sort of blanking on my other screen. Alina, do you by any chance know whether it's possible to just upload the slides onto the program directly?
Yep, you can share it to me if you have the slides.
Ah, I see. Okay, but maybe wait. Let me just try this again. Okay, I think this should work now. Great. Okay, let's stick with this one now. I hope everyone can see my slides. So I just maybe want to start by saying at the very broad level what inclusive insurance is. So according to the International Association of Insurance Supervisors, microinsurance is insurance that's accessed by the low-income population, provided by a variety of different entities, but run in accordance with generally accepted insurance products. So it has to be an insurance product. It's not social protection. It's not publicly provided health insurance, for example. Secondly, inclusive insurance. It's all insurance products aimed at the excluded or underserved markets rather than just those aimed at the poor or narrow conception of the low income market. So the reason why I'm sharing this is because this is the definition of inclusive insurance that a lot of the international organizations that are active in this field work with. But when we talk about inclusive insurance, who exactly are the excluded and underserved? So very broadly, the IIS says that, and also when you look at the experience across many different countries, these tend to be people who have lower education levels, maybe have less insurance awareness, have lower or irregular disposable income and mostly spent on essentials. So I think in Malaysia's case, it's the same as well. And I think in the past years, you would have seen reports by the Khazanah Research Institute, for example, that showed the breakdown of expenditure by Malaysian households in the B40 segment. It also tends to be people who are difficult to reach. So this can be geographically. So maybe they live in rural areas and they live far away from a bank branch or a post office or insurer's branch. And they can be informal employments, which also makes them difficult to reach as well. Because if you're thinking about migrant workers, for example, if you're thinking about domestic helpers, if you're thinking about care workers and so on, a lot of them are sort of in a way freelance workers, so they don't really have an aggregator like most of us. We work for an employer and we can easily be covered under a group insurance policy, but these people not so much. And then the last point is that they also tend to not trust insurance providers because sort of experience has made them, I would say, maybe wary of formal institutions, or maybe they've just not had formal interaction with banks or insurance companies before. And of course, insurance, I think you all well know from all your readings and your interaction with insurance and your studies that it's just not something that gives you a tangible product upfront. And that's one thing that a lot of people who pay for insurance struggle with. So this is a question I would like to put to all of you, and I would just like to ask you to share in the chat. How many of you personally know someone that you would consider excluded from insurance for these reasons? So think about a family friend, a family, an acquaintance or a friend that you know. What do they do? Where do they live? What's their job? Do they have a family that they're supporting? How much do they earn? Do they have a bank loan? Do they have a smartphone? So yeah, feel free to share your thoughts in the chat. Yes, I see that we have a couple of yeses so far. Yes, and I think a lot of these studies are very sort of high level and principles based. Think of real life stories. A lot of them, although it can be quite generalized, there is truth in it. So, for example, when I was when I was working, as in when I was with Bank Negara, attended. I once interacted a lot with Prukase, which is Prudential sort of CSR sort of program that deals with insurance, that deals with sort of insurance education and sort of protection scheme for people who live in Project Perumahan Rakyat. And what they found from their focus group discussions and so on was that these people, they have savings that can last them so these are the dealing with. Yes, that's true that people don't discuss their insurance situation openly. And interesting story that a colleague shared was that when in Ghana they were trying to do sort of insurance clinic, small businesses and things like that, and they were doing some research leading up to this, and they tried to approach some sort of and things like that, and people actually chased them away because that's the extent of their distrust of insurance. So speaking of Ghana, this is also just to show you some statistics that sort of reflect the low income profile that I was speaking about earlier. So you can see in the case of Ghana, a lot of people who are by the regulator to be the target segment microinsurance. They are self-employed. The with or without that's meant to say employees. So self-employed with or without employees. So they can be small businesses, SMEs, micro enterprises, and a lot of them are in informal wage employment as well. But of course, there's also a number of them who are in formal wage employment. And when you look at the sort of graph on the right, most of them are engaged in trades. So safe to say that a lot of them are actually SMEs and micro enterprises. So this is also another thing that I just wanted to ask everyone to share in the chats, summarized as briefly as possible. What do you think insurance regulators do? I know that there's one of you in the audience who actually is from Bank Negara Malaysia, so you're not allowed to answer that question, but the rest of you, yes, you are allowed to answer that. Okay, so I like what's coming through with the rules twice by Najib. Thank you. And what people are saying about setting limits, governing, making sure. So I really like this term making sure because I feel that is a lot of what regulators do, but of course with a reason. So I think you can easily read up on the technical details yourself from the documents that you have from Bank Negara's website, from also the IIS website, from the Financial Services Act 2013. You have all those documents there. So I would like to sort of put in my own words what I think regulators do. So I feel firstly, regulators prevent harm. Right. So on the insurer side, they make sure that insurers pay their claims to policyholders when the claims fall due. So pay claims to their paying customers. And secondly, they make sure that insurers and their intermediaries treat consumers fairly, right? And then thirdly, consumers, they make sure that consumers are protected. So things like having an ombudsman for dispute resolution, having a complaints channel, having information and education and knowing their rights, right? So regulators make sure a lot of things to ensure that the market runs fairly and well. But secondly, the other thing regulators do is that they do proactive good. So they don't just make sure that markets function smoothly, but they also want to make it better. So this is something that a lot of developing and emerging markets do, but not so much in advanced countries. So Malaysia is one of the most active regulators in this respect, where they develop the insurance market by, you have seen the financial sector blueprint, you've seen all these financial inclusion. So it's about making different things for the good of the consumer, right? So having more diverse and complex products that suit many people's needs, a more inclusive insurance sector, more efficient and also in terms of cost sector as well, and a more digitalized and a modernized insurance sector. So these are all the kinds of things that insurance regulators can do as part of their role, although of course it comes down to what is specified in the law in terms of their mandate. And how do regulators do this, right? So if you really think about all the regulations that are in place, they mainly sort of revolve around these three objectives. So firstly, market entry and gatekeeping. So making sure that only good insurance companies, for example, can enter the market. So that's where you have licensing criteria, minimum capital requirements. They check the boards and the governance structures of the insurance companies. They check their track records to make sure that as far as possible, you only have good and well-run companies in the market. Secondly, regulators make sure that when companies are in the market, they behave well. So these are the prevent harm things that I talked about earlier. And thirdly, regulators make sure that consumers know and they can act on their rights. And in order to do their jobs, regulators also have to deal with a number of stakeholders. the reason I put this diagram here is to sort of help you like sort of map out visually the different kinds of, let's say, clients that regulators have to work with and who they have to consider when they set regulations. So firstly, what are regulations and how are regulations passed? In most countries, you would normally have sort of a law that specifies what a regulator is mandated to do and how they can exercise these powers. And their relationships with, let's say, the government, with insurers and consumers normally are touched on in these laws as well. So for Malaysia, that law is the Financial Services Act, and that's what we call primary legislation. And normally in the primary legislation, there is something specific that says that regulators themselves are also allowed to issue regulations or directives or circular letters depending on the country, and this is what you call secondary legislation. In Malaysia, the term for that is standard, and you can normally find all these regulations on Bank Negara's website. How are regulations made? I think the first step is the same in most organizations, which is that it starts internally. So you have all the different departments in Bank Negara, and there's always an internal deliberation. There's always a proposal to management, and in between there might be a step where the regulator maybe conducts a demand survey or maybe does a focus group discussion or talks to the industry. And after they do that, they come up with a proposal for regulations. They go to management, they get it approved, and then they publish it for consultation with the public and with insurers. And then some months after that, it gets finalized and issued as regulations. So that's kind of the simple summary of it. But of course, these sort of processes takes time. So I'm just going to give you an sort of a reality check kind of example. A couple of years ago, I think at the end of 2018, if I'm not mistaken, the Hong Kong regulator issued their first license for a digital insurer. And what they said was that, we issued it in record time, 10 months. So this is just to give you an idea of how long regulations can take and how long regulatory processes take. It's not a simple process. A lot of, let's say, licenses are issued taking up to 2 years. A lot of regulations are drafted take a few years to draft. So in South Africa, for example, their micro-insurance regulations actually was a draft for 10 years. And when it was finally issued, a lot of people were like, oh yeah, it took that long to finally be issued, So it's a slow process, and a lot of things can be improved about it. But yes, this is just sort of the reality of how it works on the ground within the regulators. This is just sort of a detailed slide that you can look at later. I'll also share the slides with Alina and Najib later on, but these are sort of a very quick summary of the kinds of different areas of regulations that a regulator would typically issue. These are things I mentioned before: licensing, capital, products approval is a very important one. Most regulators have some kind of regulations about whether new products that are launched in the market needs to be approved before launching. And this is something that is a very key factor for new innovations in the markets, for inclusive insurance products as well. So the idea is that, ideally, if all of these regulations are done well, if everyone complies, the market should function well, right? But we know from experience, and you know from the reason that you are here, that a lot of insurance markets are not inclusive, and a lot of people are left out of the markets. Just to give you a sense of numbers, I think Malaysia's sort of insurance coverage rates. The last I checked, it was about 35 to 37% of Malaysians have life insurance policies. A sort of cross-country study across Nigeria, Ghana, Kenya, and Rwanda showed that only about 4 million out of 138 million people have some sort of insurance cover, and that means it's about 2 to 3%. And in comparison, Nepal has an insurance coverage rate about 17.5% with double counting included. So this kind of gives you an idea of where Malaysia stands and what's inclusive, what's not inclusive. So why are people excluded from insurance? Lots of reasons, and you will hear different things from different stakeholders, and it's important to also sort of understand that perspectives may not always match reality. I mean, someone will always have a reason to complain about something, and as when you wear the policy-making hat, it's important to try and understand why people say the things they say. From an insurer's point of view, of course, the standard reason is that there's not much money to be made. I mean, people have been saying this since microinsurance started, like It's in the 1990s. Not much money to be made because, of course, expenses are high relative to low amount of premiums. And where insurers rely largely on agents, agents don't want to sell that because it doesn't pay them enough in terms of commissions or fees or whatever. It's expensive to service, and yeah, expensive to service and doesn't pay enough. That I would say that's the main two reasons for agents. And thirdly, on the insurer side, we also hear a lot of comments like, oh, you know, the poor will never buy insurance, low income people will never buy insurance because they just don't appreciate it, they don't understand it. They would rather buy a sofa and an Astro than buy insurance. I mean, there are a lot of this kind of like generalizations that people say about the poor. And I'm not going to say that none of it is true, but I feel it's important to firstly not generalize. And the second thing also to understand it not from a patronizing or from, you know, a judgmental point of view, but to understand why people behave the way they do. And I think a book I would really recommend for looking at that is Poor Economics by Abhijit Banerjee and Esther Duflo, where they have little paragraphs of basically the financial behavior of low-income people that they've studied. And it talks about the same issues as well. Other reasons why people are excluded from insurance, distribution model sometimes is just not suitable or not scalable. I think a good example of that at the moment is a lot of these new insurtech things that are coming up, digital models. A lot of noise around it, but I would definitely say that it's not a very mature scene yet, and there are a lot of promising models. But you know, when you really try and when you really look at the user experience, there are a lot of barriers along the customer journey that might discourage a first-time user of insurance or a first-time user of a digital financial tool from renewing their insurance policy. And then last but not least, from the consumer's point of view, why do they not buy insurance? Also, good sources, things like demand side surveys, focus group discussions. There are so many of these studies that you can find online, and I feel a lot of them are also applicable to Malaysia as well. So the reasons you hear are things like, oh, I don't really understand insurance, it's too complex, I don't really know where to buy it, I have my ways of managing anyway. So when a lot of countries, from Philippines to Colombia to Tanzania, a lot of people in low income groups, they manage risks in different ways. So they would rather borrow from a family and friends or friends when a financial emergency happens. So when they need money for a funeral, for example. And if you really think from their point of view, if I can get money from a cousin immediately versus waiting for a claim to be paid out in 30 days, I mean, you can sort of understand where people are coming from and why they tend to stick to strategies that they know have worked well in the past, right? Also, of course, the logical conclusion from that is that maybe insurance just doesn't suit, is not designed to suit the needs of excluded consumers, and because they can't afford it, because of these different challenges with claims and things like that. So I put the link down there to a video by the AXA Emerging Customers team. They were on a sort of an international panel discussing this, and there they talked about how they did a study on women's attitudes to insurance, and they said that, you know, the study really just kind of really turned around all the assumptions that they had made earlier about women's behavior, and so on. So I would suggest looking at the video when you have that time as well. So we talked about problems. So what is the solution now? So what's needed, and who's really got the answers to inclusive insurance challenges? I mean, I would say nobody does. There are a lot of things that you hear, for example, the things I put on the screen here. So better products, alternative distribution channels, consumer awareness. I mean, these are the standard things that people sum up, right? And I would say that all of these things are true, but none of them and they take time to improve. So when you talk about better products, I mean, that's a no-brainer. Of course, better products are needed. It needs to be more needs-based. It needs to be more consumer-centric. Suave, I think you've probably come across Suave in your readings as well. But to what extent, you know, people can actually design good consumer-centric products that proves to have good renewals, that proves itself, I think that's a different story. And to give credit to the industry, there are a lot of attempts by the industry to improve the way they design their products. And then alternative distribution channels or underwriters. Thinking about digital technology. So yes, of course, that's a potential solution, but does that mean that only digital will work from now on and that personal interaction is no longer important? Well, not really, because if you look at the experimentation that people have been doing with mobile insurance, they realize that they still need a bit of personal touch in order to make sure that people keep paying for their insurance or people understand what they're buying. Consumer awareness as well. It's also very easy to say, okay, the regulator should come up with large-scale national financial education initiatives, print books, and then, have teachers teach it in primary schools. But what if teachers don't have the skills to do that? What if the books are outdated and then they just end up in the storeroom after 5 years? So there are all these practical implementation challenges that sort of hinder the efforts to implement solutions that sound good in theory. And I will also encourage you to look at the recordings from the 2020 International Inclusive Insurance Conference. I also put the link there, and a lot of the debates are discussing these sort of lessons from inclusive insurance practices worldwide. So going back to the problems that we talked about earlier, where do regulations play a role exactly? Many things that regulators have tried, can do, the industry has suggested. One popular thing that we always hear is this one on clarifying regulations and having faster approval processes. So this is one of the most popular complaints that you hear from. Yes, very emphatically. So that's one of the major complaints that we hear from global insurers. Space and there are a lot of new technologies, index insurance and satellite-enabled insurance, and regulators apparently are not responding fast enough to approve products. And then, of course, you hear things like more flexible commissions limit. That's also a very common debate in inclusive insurance as well, because the argument is that even when you have a percentage limiting how much commissions can be paid, the absolute amount is just too small to incentivize anyone to sell. And then you hear experiences from India saying that lapse rates are just way too high, this doesn't make sense, financial education initiatives, we talked about that. Providing data and research, I think that's also quite a no-brainer. But the two things maybe that I'd like to talk more about is about where regulators can enable new insurance models. So whether distribution or whether through underwriting and product design itself. So looking at community-based models, or looking at index insurance, or looking at digital models. So allowing things like e-signatures, allowing cloud computing, outsourcing. These are all common issues that are discussed by in a lot of markets worldwide. And then the other thing, which is basically A2I's bread and butter, is the inclusive insurance sort of product regulatory framework. So what is inclusive insurance regulatory framework? So we talked about the different regulatory requirements earlier, but what an inclusive insurance regulatory framework is a kind of cross-cutting regulatory framework. How many times can one say regulatory framework in 40 minutes? But anyway, so it's a cross-cutting framework that allows for proportionate requirements in each aspect. So maybe simpler licensing, simpler or faster approval, simpler training requirements for intermediaries, simpler language for disclosure. But at the same time, consumer protection measures are maybe a bit stronger. So claims has to be paid out faster. Complaints also must be addressed faster, or maybe there must be like a sort of dedicated helpline for inclusive insurance consumers. So these are the different things that regulators have tried worldwide, and I'm sure you probably have seen this already, but I will also encourage you to look at Bangara's new exposure draft, which is the consultation documents on regulations that I mentioned earlier. This is the kind of document that is issued by regulators to get public feedback. So I encourage you to look at that. That's a very, it's a very standard, comprehensive regulatory framework for inclusive insurance, and you will immediately see from it what it means. And this is also just the obligatory map showing you how many countries in the world have implemented such an inclusive regulatory framework. So 28 across many regions, as you can see, and 21 currently have it under development. And I realize I should probably now add Malaysia to that list as well. I think another interesting question for regulators to ask themselves is also how interventionist should regulators be. So issuing enabling regulations, or issuing any kind of regulations, is just one part of it, right? But there are also things that they can do that are more light touch, like education campaign. There are also things that they can do that are a bit more heavy-handed. So designing national microinsurance products. Malaysia tried to do that with the 1MMPP maybe in 2012 or so. Philippines took a slightly different approach. Rather than having one single microinsurance product, they design prototypes to the industry, and the industry is allowed to adopt these prototypes and then sort of adapt them, and with slightly different features. But the prototypes are there more to help the industry design a product rather than to say that this is a product the industry has to offer. Of course, the most interventionist way, in the sense, is to either require companies to offer insurance products or directly provide themselves. So things like a national scheme like My Salam, of course, that's been very high profile lately. But just so you know, it's not uncommon. I mean, it's done in a lot of places. I would say actually a lot in Asia. So India, Thailand, for example, I put the examples down there. And India and Nepal go even further to say that a certain percentage of insurers' portfolio needs to be microinsurance according to the strict definition criteria that India and Nepal put down. And the overarching question, I think, when it comes to policies, the more interventionist you are, important aspect to consider is there be regulatory arbitrage. Because if you set really strict product criteria, for example, maybe insurers will just say, okay, I want to serve the market, but I don't want to follow your criteria, so I'm just going to serve the market by offering another product that's not branded under inclusive insurance regulations, and then I can avoid all the regulations that you put down. So there are these different ways that industry can respond to this, because market actors are also people as well, and it's very hard to control that when you sort of set regulations from such a high level. And let's see. So that's the end of my presentation, actually. I guess now we will now go to the sort of question and answer session, and I welcome questions from everyone.
We have a bunch of questions for you.
Sorry, Alina, I can't seem to hear. Oh, okay, now I hear.
We have a bunch of questions for you on the question tab. I'm not sure whether you can see, but you can choose which one you would like to address first, or go with the most upvote. So for the participants, do click on the question tab on any questions that you like, upvote it so that Hui Lin can then take the more popular questions to answer.
Okay, do this democratically. Let's see. Cool. So maybe I will just start with the most popular question. So with all these regulations in place, why do you think people have such a negative view of insurance? That's a very interesting question. So I think firstly, what I would say is that I don't think regulations have that much influence on people's perception of insurance. So in the sense that I think regulators have one way I would look at this is that regulators have a lot of good intentions, in the sense that they set a lot of requirements on how insurers and agents should sell insurance to consumers and should give information to consumers. But at the end of the day, regardless of all of that, insurance is still ultimately very complex. I mean, people have tried to put insurance in simple language, but my feeling is that it's only achievable for simple products. So if you're looking at let's say the mass market in Malaysia or the mass market in middle income countries, you're dealing with life insurance policies, critical illnesses, investment linked. And I think to any person, even people who have an accounting or insurance background or whatever, I don't think anyone can say that insurance is simple. That's one. And the second thing is, of course, that, ultimately insurance is just, it's a delayed gratification thing, right? I mean, you pay your premiums today and you don't know whether something's going to happen to you. So it's between that and between investing in something else. So it's just the sort of the intangibility of insurance that makes insurance difficult to swallow, I would say. And I think the third thing is also that that I think insurers themselves have also been doing a bit of self-reflection on how they themselves have been treating customers as well. You hear a lot of stories about claims where people complain because they feel like their claims were unfairly rejected, or they didn't receive enough information in the beginning when the agent was telling it to them. They don't understand why insurance companies refuse to pay their claims. So it's kind of and insurance is built on this history of introducing exclusions into the products, right? And a lot of that is for, in a way, good reasons as well. It's for good risk management and so on. But what happens is that these exclusions are so specific, and when people don't get their claims paid because of an exclusion, they feel cheated at the end of the day. So so insurance has kind of like gotten this reputation around taking people's money and not paying out. And I think that sort of is a root of insurance's bad reputation, and it's something that I would say that's quite hard to rescue at the moment, because a lot of surveys show that insurance is one of the least trusted of industries at the moment. Okay, let's see. I'm going to take maybe the question from Adam first. So when you say fairly, does it include managing price discrimination in terms of gender? I think that's a very interesting discussion, because that is that speaks a lot to the question of how interventionist regulators should be. So EU, for example, has always had this. I'm not sure whether it's a regulation or law even, to say that. Okay, also I need to check my facts. I'm not really sure also whether it's all insurance products, but basically they have a law about not being able to discriminate between men and women in terms of pricing insurance. Um, so so what I'm trying to say here, I think, is that what's considered fair is something that regulators have to decide for themselves, how interventionist they want to be, and to what extent they want to sort of influence market decisions. So in the case of EU, they've clearly decided that it's important enough as a policy objective to sort of intervene and make sure that there is no price discrimination between men and women. But it's not something that's done in all countries, and I think it's something that sort of raises the question of policymakers and regulators should ask themselves, what do they see as a fair market, and what do they see, what kind of outcomes do they want to achieve. When you look at regulatory fair outcomes from an IAS point of view, it's very practical things. It's just things like making sure that consumers receive information before they buy insurance, consumers receive good advice, make sure they sign their consent forms, make sure that claims are serviced in a good and timely manner. So it's, when you look at the regulatory side of things, a lot of it is actually very practical issues. And this kind of discrimination and things like that, it's kind of larger philosophical and ethical issues that regulators will have to discuss with their governments and sort of do a bit of soul searching as well, I would say. Let's see. I see some difficult questions that will also approve new insurance companies. Okay, maybe to take the easy one first. Do these regulators also approve modified insurance products for these insurance companies, and how long the changes take to approve? So if you look at the global level, I think it depends country to country. If you're looking at Malaysia, I can't give you an answer now because I don't have the answer. And I think that's something that you could maybe investigate in the course of your workshops as well, because I think that's a very relevant question. So firstly, just from my knowledge of Malaysia's regulations, product approvals are only necessary when it's a product that's significantly new to the market or significantly complex in a way. You can look at the guidelines. Bank Negara's guidelines should be on the website, but basically some products need to be approved and some don't. A lot of countries also kind of take this sort of risk-based approach, because they see that, okay, new products, maybe they need to check that to make sure it's okay first before it's launched. But if it's just another personal accident product, then they don't need to approve it. So regulators have that kind of targeted approach, and how long changes take really depends on how much resources the regulator has. So if it's complicated and the regulator is busy, okay, it can take 6 months to a year. I mean, we have seen cases like that. But I would just want to give the example of where Singapore now has this sort of I can't remember what they call it, an expedited sandbox or something like that, where especially for brokers, where they made a commitment that approvals will always be given within 21 working days. So as you can see, product approval varies, and it's something that regulators have seen that they are trying to improve in order to that they need to improve in order to allow more innovation in the markets. Let's see. Oof, a lot of questions. Let me scroll up again. So I think, Aisha, I don't have a good answer for you for that, and I think that's something that maybe is good for you guys to discuss among yourselves, because um firstly, whether or not microinsurance is a risky market, I think maybe that's something that FWD, maybe you guys can give an answer to what you think about that, because I think different insurers have different risk appetites, and different insurers will give you different answers to that. Some insurers feel that there is more sort of prospects in the market, and some feel that there's less. That's just the reality of it. And what does this mean for the future scene or insurance? Yeah, I think that's something that you maybe want to discuss among yourselves, because I don't think anyone has the answer for that. And so much of that depends on the willingness as well of the industry to offer to offer products. It also depends on how consumer education and understanding changes as the years go by. So I'm not able to give you an answer to that, I'm afraid. Um, so Hadina has a question on what do you think whether the high insurance penetration rate in Malaysia is contributed by mandatory insurance. So the one I quoted just now, 37.5 or 35, I can't remember now. So that's life insurance, and that's based on actual policy uptake of people. So how many policyholders, how many people in Malaysia are policyholders. So that's life only. But if you look at general insurance penetration numbers, that's always measured by premiums to GDP. And I think most countries would have the data where they separate it by general and life. So I think from there you can see whether or not it's contributed by mandatory insurance. But definitely we have seen in some developing countries that most of the general insurance take up is due to something like motor insurance or agricultural insurance where it's compulsory. I think so yeah, the short answer to that is I don't know for Malaysia, but that's something that you can definitely easily find out from the statistics. Whether pelindungan senang is risk-free in long term. Tough question. I'm not sure I can answer that. Depends what you mean by risk-free, to the insurer or to the consumer. And yeah, I'm not quite sure I understand that question actually. I see a raised hand. Do I click on that? Yes.
Hi, I mean to the consumer.
Okay. I'm not going to give you any answers about Pelindungan Sedang, because honestly, I'm not in a position to say that at the moment, not being run by Negara anymore. And I mean, for me personally, I also feel that it's quite early days, so it's hard to say. But I think, and also, okay, so I think my short answer to that is that with inclusive insurance products, where you have a dedicated inclusive insurance regulatory framework, the intention is to make it less risky for the consumer, in the sense that they are more assured of a faster claims process. They have simpler products, so they worry less about maybe having claims rejected because of an exclusion. And it's also provided by companies that are a bit more responsible. So they also worry less about, companies not paying out just because they can, that sort of issues. That is the intention. So it is to reduce sort of the risk on the information asymmetry for the consumer. But of course, you have companies that do it well, companies that do it less well, and that's something that only happens after the fact. So, for example, in Zimbabwe, there was an incident where there was a mobile insurance company, and then there were mobile insurance products offering products to like millions of people. But then overnight, because of a contractual issue between the mobile network operator and the insurer, and the outsourcing provider, they just pulled the product from the market. And so consumers who had their insurance policy basically just lost it overnight. And in a case like that, where you have a regulator that's less well resourced, have less powers or less capacity, maybe they're not able to take action as effectively as regulators who is in a more advanced country. But I mean, whatever it is, and also secondly, it also depends whether you have a dispute resolution system in place and things like that, and whether consumer gets recall. So I think, okay, so the short story to this is that it's not risk-free, but the best a regulator can do is to make sure that consumers get a bit more information, the products are more simple, and that there's a recourse for consumers when something goes wrong. But I don't think there's such a thing as a risk-free product for consumers. I see a raised hand. No, okay, no, I don't. So I see that we just have sort of 6 minutes left of the session. I don't know, Alina, should I just go on or? Wait, you're on mute, I think.
I have a special request for you to answer Adam's question. What are the pros and cons between a centralized publicly managed scheme and decentralized privately managed scheme?
Centralized publicly managed scheme.
Or maybe Adam, do you want to elaborate your question by raising your hand?
Yeah, maybe elaborate on what you mean by a decentralized privately managed scheme. That would be helpful.
Okay. Hi. Yep. All right. So it's something like SOCSO in itself is a social insurance in that sense, where they provide work related insurance for work related injuries, invalidity, pensions, and all that. Just want to know what are your thoughts on publicly managed schemes like SOCSO versus having like this like large competitive private markets basically, and which do you have a preference, or is it really just it depends or something like that?
Okay. Sounds a bit like a cop-out, but of course I'm going to say it depends. And okay, I think that's a difficult question to answer in the sense that it depends. Yeah. So I think firstly it depends. Let me think about this. So I think when you talk about SOCSO, I think the question also equally applies to something like healthcare, right? So, should health insurance be provided publicly and centrally, or should it be something that's left to the private markets? I think different answers. So I would say that the state definitely has a role to play in providing a social safety net for its citizens. And in terms of what kind of social safety net, what kind of risks the state should cover, experience worldwide has shown that the basic will be things like health and something like SOCSO, so work-related social protection. And And I think nowadays you're also hearing more debate about pandemic risk as well. So I think So I think generally what we are seeing is that where it's a very sort of large, potentially catastrophic risk, where we feel the risk is too high, such that the private market will not want to take it on. There's a strong argument for it to be a centrally provided scheme. Let's put it that way. So when you look at natural disasters, when you look at the pandemic risks, when you look at things like health and work-related incidents, I think there's a strong argument for the state to play there. I would say that because especially in developing countries, a lot of insurance companies simply just won't have the capacity to take on that risk, nor in many cases the interest as well. So that's one. And I guess when you have the state providing it, then the idea is also that it technically, in theory, it should be fairer. It can be done in a more equitable way. But of course, there are a lot of implementation challenges. It's not always the case. I mean, even when you look at SOCSO, there are a lot of practical challenges to it as well. Private market, I guess the argument is that, you have more product choice, you have more innovation. So maybe it's sort of better in terms of giving consumers what they want. But then equally, we also see that even with basic things like pure protection life, it's not been very inclusive either. That's one, I guess. I don't know. So this is also like sort of my personal conflict with insurance as well. I feel like a lot of risk should be covered by the government, where the government can do it properly and afford it. But unfortunately, that's just not the reality. And you find in a lot of developing countries, the government can't really afford to really provide a huge sort of state-provided social safety net without support from the private sector to bridge some of these gaps. I would say that's kind of like my summary of the situation.
All right, thanks, Hui Lin. I know we have a bunch of questions that are unanswered, but what will happen after this is we will move all of your questions into the Padlet for mentors to answer. And this Padlet will also be shared with you, Hui Lin. So if you have the time to look through it again, you can give us your answers to it. But thank you so much for that amazing, amazing talk. I am getting so many comments on the site about how you have made it so entertaining for us to listen, so engaging. So thank you so much. Please feel free, if you're available, to stay on for the session. We can network when we go into the lounge. But thank you again, Hui Lin. Thank you for your time.
Thank you very much for the opportunity as well.